Hey guys, Mike here, and what I'm going to do with you is I'm going to share with you a section of the Generation Wealth Investment Club call where we kind of dive into tariffs, what they're doing, how they're kind of messing around with the market right now, and where we believe we're going here into the future. Now, this won't be the first time that we've seen tariffs rock the market here, but what happened the last time they rocked the market, and where do we go? And I'm going to share that with you guys, show you guys where we're from here, where we're going here. And so you're going to hear some people talking. It's the club talking, asking questions, going back and forth here. So you hear a bit of a different format than usual, but it's me sharing with the club and walking with the club through where we're going next and where we've been in the past in terms of tariffs. All right, so hopefully you enjoy that episode. All right. Good morning. How's everyone doing today?
Good
Good. morning.
Good morning. Good to see you guys and gals. Good to see everyone. All right. Let's dive in here. What's going on? Where are we in the stock market? What is going on? Okay. So we're going to play a little game. You guys ready?
Yeah.
Y'all
Ready.
Yep. Yeah.
Ready?
Good
Okay.
morning, everybody.
You can see my screen.
Yep.
All right. You're going to guess the year. Okay. Excuse me. You're going to guess the year. Hold on. Wayne's coming in. He'll like this game. So let's just wait for him to get in here. All right. Wayne, how you doing, man?
Not too bad. How are you doing?
Doing fantastic. Hey, we're gonna play a game here. It's called Guess the Year, okay?
Okay.
You ready for this? Okay. Here we go. I'm just getting my screen all there we go, rearranged. Okay, here we go. Guess the year. Okay. Tell me what year we are in. Trump is president. It's the first 90 days of Trump's presidency. Tariffs are being slapped on everywhere. Markets are down 10% since January. And here are the headlines. Okay. Trump can't have his tariffs and the stock market too. Okay. And then we'll go to this third one here. Trump's fights have cost the stock market trillions. Okay. But hold on, there's more. Okay. Trump goes quiet as the stock market falls on trade war. All right. And then the New York Times right here, Trump laments the stock market plunge as a big mistake.
2018.
2018.
You guys are smart cookies.
Actually,
It showed in the URL.
it's-
Actually.
yeah.
Okay. Yeah, you're right. 2018. It sounds and feels a lot like 2025, doesn't it?
Yeah.
Right. First 90 days, market's down 10%. News on tariffs everywhere. Right. And here's the truth, guys. Let's go back here. Let's hop onto the charts and let's go over here to the S&P 500. I'll just add you back in. And we'll go big, and we're going to go all the way back to 2018. Right here. All right. From top to bottom, about 11% pullback, almost a 12% pullback in the first 90 days from January. And looks like we start to turn over right March into April. Looks like April was kind of the end of it there. Before we had a really nice pump up and then a big dump down. Now, if you invested just $1,000, okay, right around here, right around this point here, this pullback, kind of like where we are now, almost. We're still not down as much as they were down here, but we may get there. Who knows? I don't know where this is going to turn around exactly. But here's what I do know: if you invested just $1,000 back in 2018 into the stock S&P 500, okay, by the end of Trump's presidency, which was up here, end of 2021, Biden came in 2022. You were up 84%. Or if you average it out year over year, that was a 19.0% year over year growth that you would have had from 2018 to 2021. Okay. That's basically doubling your money every 3.79 years, which includes, by the way, okay, that includes this pullback that happened here. This was like I call this 2019, and it started in 2018 near the end and went all the way to 2019 or close into 2019. So we have this pullback here of 20%. Okay. We had this pullback here. This is the COVID pullback where the markets pulled back all the way to the bottom, 35%. And then we had a couple other small pullbacks as well. You can see one there. Yeah, the little one right there. There's a couple here that pulled back for us. But if you include all these pullbacks, so we had a 20%, we had a 35 on the S&P 500. Now, if you're on like the Qs, you would have had closer to a 50% pullback in the Qs. Okay, as well as a couple smaller 10, 5, 10%, 12% pullbacks. Okay. If you added to your positions during all right here, excuse me, and just held, you were up 84% by the time you got there with all the pullbacks. Now, if you added in the pullbacks, okay, you just said, wow, I can't give up this opportunity. We've pulled back 20%. This is bargain. Let's go. And added there. And here again, oh my gosh, 35%. Wow, an even better bargain. Let's go. And then these little ones here, which again were 6, 7, 10% kind of style pullbacks. You would have more than doubled your money. And let's call it 2018 to the beginning of 2022. By the time Trump was done his first term, you would have doubled your money in the stock market. And truth be told, you could have done the same during Obama's term. You could have done the same during Biden's term as well, and a lot of us did. We more than doubled, or at least I hope you more than doubled, because it's been a great 2 years. Oh my gosh, 2023 into 2024, it's just been a monster 2 years in the market. So hopefully you have doubled, or at least got a good piece of that pie. All right, but all this to say, I believe markets are going to move despite the dirty dog in the White House, and they all have. There's been time to make money during every single presidency. So is this time different? Is this pullback right here different? I don't know, maybe. But isn't every time we pull back, isn't there a different reason, different excuse as to why we pull back? Isn't the media and the news always looking for something to explain the pullback? Right? The way I see it, guys, is I believe there's a rhythm and a reason that this one, or let me say it this way, for most people, whether it's this pullback here, 2022, or COVID, or 2018, or you go back, just pick any pullback. There's another one there. There's our 2015 into 2016. You can go back to 2008 if you want. But it seems every single pullback, every single time we've kind of gone deep and we've had these little pullbacks, there's always been a reason as to why this one is going to take out the market, why this one is different. And all that to say, guys, the moral of the story is this. If you just bought and sat on your hands in 2018, you just bought and sat on your hands, right around here up to yesterday, you easily, if you did nothing else and just walked away, you would have doubled your money easily. This is passive investing, doubling your money. Doing it our way, hopefully you've gone 2, 3, 4, 5, even 500, maybe even 1,000%, depending on what you're getting here. But you would have done pretty darn good, right? And I think you're going to do pretty darn good again. I don't think this is the end. I don't think the stock market's broken. I think we're all getting what we've been wanting to get and been waiting to get. A really nice, good pullback, which, by the way, a pullback of this magnitude hasn't happened since 2023. roughly 18 months it's been since we've had a pullback of that magnitude. It was July to August of 2023 we got a pullback like this, and I remember at the time everyone was freaking out. I remember that. I remember everybody freaking out. Oh my gosh, where are we going? What's going to happen? Is the stock market broken? And it's like, generally speaking, every year since can't remember if it's the 20s or the 50s. I'll have to double check that. Since 1929 or since 1950 was one of those numbers. We've had they're calling this a correctional pullback. I hate that word correction because it means that there was something wrong. It means the stock market was overpriced. I don't think it is or was, but we've had a 10% pullback. You can expect at least one a year, either since the 50s or the 1920s. I forget which one it was, but all that to say, it's been a long time. A long time we've been looking at this data, and you can expect a nice 10% pullback at least once a year. Now, do you get it every 12 months? No. 18 months was our last big one. Before that, then, was about 12 months before that, we had a huge one, right? So it plays out differently here, but we are in a good spot. And all this stuff that we're seeing today is the same stuff we saw 7 years ago. Okay. And in fact, when I look at the cycles, for those that don't know what cycles are, basically I look at cycles, they give us a good prediction going into the future. Not perfect, but we take past movements and past information, it draws these lines on my chart, and I project them forward so I can kind of see where we're going into the future. What I want you guys to focus on is this green line right here, okay? This is a very short cycle. Check this out. This is 2018 right here, okay? You can follow that line right there. That's 2018. Look at this. This is 2025. Almost identical. And 84% of the time we've seen this cycle, it's been correct. Our major cycles showed us the 2022 pullback that was going to happen, and these cycles were put in years in advance. Years in advance, we saw 2022 pulling back, and we saw the bottom here pushing us forward. That's years in advance. There's the COVID pullback. Cycles also showed that. Now, they weren't perfect, but they did show we were in a high zone, and that a low zone will be coming up shortly after here, and the market move shortly after. 2018, there's our more midterm cycle pulling back. Look at that, pulled back. And so the cycles, at least the short term, long term might be looking a touch different, but at least the short term are showing us similar moves to 2018. Is that a coincidence? Or are these cycles telling us something? That's time to get ready for the next jump up. And to not be scared of the market, but to actually get ready to begin. Okay. Here's the thing. If you're going to listen to the hype on social media and on the radio, good luck. Like, good luck. It's funny. Motley Fool, and there's a whole bunch of them. Jim Cramer, and there's a whole bunch of them out there here. It's fun watching them give us the news to what I can see happening years in advance. Like, it's fun saying, okay, I wonder what the news event's going to be on that pullback that we see coming. And then just sit there and see all these media outlets like talk about the news. This is the reason the market's pulling back. It's like, no, I don't think that's the reason the market's pulling back. I think the market was due to pull back, and now we're trying to attach all these stories as to why to make sense of it, right? But if you're on social media, man, and following those goobers, good luck, right? They're going to have you out of the stock market faster, right? And for most people, they won't come back in. For a lot of people, they won't come back in because they just get too scared. And there's people out there that I really like friends that I really respect and look up to. And to see the stuff that they're posting right now, I'm just like, man, I think when it comes to the market, you're just an idiot. Like, you just don't know how this stuff works, right? So my message to you is don't listen to them, right? Their bias is they're so biased, they can't critically think for themselves. Because I've heard what we're hearing today, I heard back in 2018, 2015, heard it back in 08 when I first started getting into the market stuff. 08, same message. Fear, fear, fear. Oh my gosh, this is it. Are we ever going to get out of this uncertainty, all that stuff? Heard it in 2020 during the COVID drop. I heard it in 2022. And I'm hearing it again. Okay. This is not new. This is part of the ticket to investing and doing, you guys are looking at your accounts. You can see your numbers changing. That's being a self-directed investor. And then being disciplined in a self-directed investing account is knowing when we have opportunity. And I think we're in one right now. Okay. Here's some more data I found. Okay. Now 2023, 2024 was a really strong year. Which was awesome. Loved it. But it felt to me, and I don't know if it felt to you guys, but it felt to me like heading into 2025, the market was looking for any excuse to pull back. That's what it felt like to me when I was listening to people talk and I was kind of getting a vibe for where we're at, just, sentiment of the market. It felt like any excuse to have this market pull back, like anything economic, anything, and this market was going to pull back. At least that's what it felt like to me. I don't know if it felt like that to you, right? Right, but we've had 20, here are the stats. We've had 21 bear markets since 1921. 21 bear markets. That's an average of a bear market every 4.6 years. Okay, here's what I also know. We've come out of every single bear market. And when we look back on our charts, every single bear market has always, when I look back, has always been an opportunity. Even if you got in at the top by accident, even if you got in at the top and we had to, all the way down, every bear market compared to where we are today has been an opportunity. Even if it didn't feel like it or seem like it at the time, every bear market, and we can go back further in history, but this chart won't, but if you go back further in history into the 70s, 80s, 60s, 50s, 40s, 30s, every bear market, you look back and you say that was an opportunity. All right, we've come out of every single one. Okay. Now are we in a bear market at the moment? No, we're not. We're just in a pullback. 10%, pretty normal.
Hey,
It's
Mike,
nothing to
how
freak
can
about.
you tell if it's not a bear market? How would you know it's not a bear market or a bear market?
Because most corrections are about 10 to 16%. Anything below that or above that, I should say, is a bear market. Percentage wise,
Over 10%?
over 10 to 16.
Oh, 10 to 16.
What's it
10
pulled
to
back
16,
now?
you're in correction territory. After that, you're in bear market territory.
Okay.
Right. So throughout history, again, we usually see these 10% corrections, 10, 12, 13. Usually 16 has been the average. And then we start to move up from there. Now, if we're in a bear market, we'll continue to move down from there. I'm going to walk you guys through how to navigate a bear market in a couple minutes. I'll walk you through showing you what to do and what my
Mike, what's
game plan is.
the percentage on this current pullback?
We're currently about 10%.
10%? Okay. So another
Again, correction is not the right term, but that's the term you're going to hear throughout the media and everywhere.
okay.
Corrections 10%.
So if it goes down another 5, then we're thinking it's in a bear market?
It has to go down past another 6 and then continue to go past that to be in a bear market.
Okay.
10 to 16 is usually a correction.
Okay.
Okay. Average bear market's about 30%.
Oh, okay. Okay.
Okay.
Yeah. Thanks, bud.
So in
That's
your
where we're at.
experience, are we headed that way, Mike?
I don't think we're headed there yet.
No?
I
Okay.
don't think so. I could be wrong. I would expect coming into next 12 to 18 months, we'll probably be in more of a bear market, but we'll see. The data is showing things are slowing down. People are scared. And sometimes that sentiment alone can drive the market down. But fundamentally, business-wise, we're not there. Like businesses are thriving. At least the businesses we invest in. I know retail is kind of struggling a little bit, but like Axon, Broadcom, like all the reports I've seen so far from our companies, most of them are beating and exceeding, which tells me companies in America are great. And there's no reason for a bear market other than sentiment right now. Sentiment can pull us down there. But I'll walk you guys through what to do if that, or when it happens. It's going to happen at some point. We're delusional to believe that it's not going to happen at some point. But let me walk you guys through some numbers here. I don't think we're in a bear market, and I'll walk you through why in just a sec here. I've got some numbers historically that I'm going to pull up and show you to kind of walk you through how long we stay in bull markets for before we go into bear markets and all of that. Okay. But I'll say this: we're at a really nice point, and I saw someone comment the other day saying they're doing brackets, and they're kind of just bracketing down. That's awesome. That's a great move. Most financial advisors will just cost average you down, meaning every month, whatever your budget is for investing, they'll put that money into the market, which is it's an okay strategy, especially since we're up more than we're down. But what I like to do, and I don't like to cost average down. And I'm going to walk you guys through what I do in a couple minutes here. But yeah, we're in correction territory. Okay, the last time we've had this correction territory, like I said earlier, was right here. Okay, that was July to October. We came down about 11, almost 12%. Now, keep in mind, if you're investing in single stocks, if you're investing in the Qs or the Dow Jones, your number could actually be bigger. Qs tend to, go bigger in both directions. If we're in an upswing, they'll go bigger in the upswing. If we're in a down, they'll go bigger down. So Qs might have been 15%. But this is the S&P 500, so that's where I'll measure this off of. We were 11.54. We're still not there on this one. This one has still been less than that, and that was a great time to get in. Okay, we came down to this 100-day moving average, which is the orange line right there. Okay, and we're currently at the 50, which is the future line. Okay. Since 1950, here's the stat I was looking for. Since 1950, we've averaged a correction roughly every year or so. Now, again, does it happen every 12 months? No. Sometimes we'll have two in a year, right? And then we'll have, like we did last year, 2024, we didn't have any. All these little pullbacks were just opportunities to get in. They were not even in correction territories. These were great times to buy and take it up. Okay. So bottom line, this is normal, right? I mean, you're welcome to blame the current president and tariffs, but here's a question I have: who are you going to blame for all of the corrections we have over the last 75 years? Right? Which dirty
gonna blame
dog
the
do we point
people.
the finger at?
The people, the fear.
Yeah, that's really what's going on. Tariffs aren't new. Tariffs have been around. Every president's done them. Granted, it's been quiet. It has not been this public. Every president, Biden, Obama, Bush, Clinton, whoever else, you can go through the history there. They've all had tariffs. Tariffs have been around for decades. It's been around forever. It's just usually done quietly. I mean, Justin Trudeau put 100% tariff on EV cars from China back in October 2024. I think I knew about that because it hit the news cycle for like 30 seconds. It wasn't a big deal. We just moved on. Right? So I think the news is looking for something. When the economy is going well, we try and find reasons for things to not be going well. And I think this pullback is a good thing for all of us. And here's my last thought. I believe, again, and I've just been doing a lot of cycle work, that really convinces me that markets are going to move in spite of who's in the office. All right, markets are going to move regardless of who's in the office, and short-term policies can shake the markets up and down a little bit here, but markets move despite who's in the house. The cycles will generally give us a path forward, give us an idea of what we should expect, regardless of whatever dirty dog, as I call them, enters the house. So this is normal. This is a part of the game. For most of you, this is the first time you've had a correction this big since you've been in this club. This is not my first time going through a correction like this. 2008 was my first time in figuring this out. And since then, we've had a whole bunch. There's no need to freak out. Plan your attack. Plan your entry. Continue to buy great companies. You're going to be good. Okay? So where are we headed? There's again, here, let me pull this back here. Let me walk you through this slide quickly here. I'm going to zoom in just a bit so you guys can probably see that better. This is a slide I found that walks through since 1949, walks through bear markets. So we have a bear market end date, June 13th, 1949, and then it walks through the next couple of years in the market. And the pattern I've noticed is the first 2 years out of a bear market, the market seems to be on fire. Like it's just a great time to like really get in and take advantage of what's going on. And then the third year tends to be a year where things get shaken up just a little bit. Not as great. You generally not as good as years 1 and 2. Now there's a couple exceptions to that you'll see as we move down. Generally not as great as years 1 and 2. The third year is usually marked with more volatility. Right? It's usually marked with not as much growth as year 1 and 2 coming out of a bear market, but generally we still see growth. And so here's 1949. We ended it in June 1949. We were 363 days in a bear market. The S&P dropped 20.6%, and here we are, first year return after the bear market. So this would be 1950, 40%. Then we had 14%, and then we had 12.9. All right, then we moved on forward here. Markets kind of went sideways, up and down. Our next bear market, I don't know when it started exactly, but I do know that it ended in 1957, October of 1957. We were in it for 415 days. So I guess if I walk that backwards, I can figure out when it started. Market dropped 21 point, is that 6 or 0? Anyways, 21%. The first year after the bear market, 31% growth. Then we had a 9.7 growth. And then the third year, we were down a little bit in this year. And I won't read every single one here. I'll just scroll through it. You guys can watch the replay and grab it here. But let me go into more recent years, actually. Okay, let's do... Oh, there's 2018. 95 days in a bear market. This is the end of 2018. So we had a mini pullback in the beginning, first 90 days. Then we went up. And then this is where we had that, 15% or... sorry, 19% pullback. End of 2018 is where it corrected. And then we had 2019, 37, 2020, and then 2021. Now, 2020, keep in mind, 2020 was characterized with that 40% pullback because of COVID. And actually, it's right here. There it is right there. 33% on the NASDAQ, 40% on the, 33% on the SPY, 40% on the Qs. And then we had these huge growth years. And then we went into 2022, which was our last one, by the way. That was our last major pullback, or our last major recession, I should say. 282 days. There's 2023, there's 2024, and 2025. We're still in it. So we'll see where we end the year. But historically speaking, even though it's more volatile, usually you don't get the growth that you get in the first 2 years out of a recession, but you still generally get some growth.
Mike,
Okay. Yeah.
is there a chart or something that kind of would predict like the days in the market? Like there's a vast difference in how many days in the market they were in bullish.
Yeah. Usually, I can tell you this, most recessions last usually 10 to 18 months is what you'll find most recessions last. The last one, 2022, was 10 months from top to bottom. January, we went into it. By October, we were signaling that we'd be out of it. In fact, at the time, and many of you weren't here, but there were a few of you here, you heard me come in. I said, there's two things that I think we're done. I think this is done. Number one is the cycles are pointing to this being done. Okay, pointing us that we're going to be out of this. Number two was midterm election years. There was a midterm election cycle that says every year after a midterm election year, so 2022 was the midterm election year, every year after, the market's always been up since 1944. And that's exactly what happened. So if you didn't get in here near the bottom because you want to wait for confirmation, absolutely at the last, like at the latest, you should have been in right here where we had chart confirmation that we were moving up. And that would have been spring of 2023. That you would have had the confirmation that we have entered the bull market. and we're going to be in it for a couple of years. All right.
So
Does
Mike,
that make
now,
sense?
it does. So currently where we stand right now, what should be the play over the next little bit, other than just watching the market and trying to figure out when to buy in?
Well,
It'll go
let's-
up over the course of the next few months as per the cycles, but does it matter when we buy in, how much we buy in, and for specifically which companies at this point?
Well, let's talk about that plan. You guys ready to dive into the plan?
Would love to.
Yeah.
All right. Let's
Yeah.
do it. Okay, let's do it. I'm going to walk you through how to play the next downturn, which will answer your question, Wayne, what to do, if we don't go into a downturn, what the next step would be, okay? All right, guys. Well, hopefully you liked that episode. Hopefully that gave you a little bit of clarity and a dose of hope as to where we're going here. Long term, we're going to be great. We've got nothing to worry about. It's the short-term stuff. Hey, who knows where we're going to go right now? We're kind of going sideways. That's okay. Here's what I know to be true. If you're a long-term investor, you can do really well investing in the stock market. In fact, I'll just say it. You can become a millionaire or a multimillionaire. It's not too late for you. If you're interested in learning more about investing and, maybe even consider joining the club where we teach people how to invest and grow wealth and buy the right stuff, stay away from the wrong stuff. Here's what I want you to do. Hop on a call with us. You can head over to moneycoachmike.com/call. Okay, and on there you'll hop on a call with one of my team members, Cheryl, Nick, Neil, and just tell them, hey, I'm interested in Generation Wealth Investment Club, and they'll get you connected with me, and we'll hop on a call and we'll take a dive into your finances, take a look at what's working, what's not working, take a look at where you want to go. If you've got investments, we can take a look at your current investments and see if we can do better. And if we can, we'll show you how, and if we can't, we'll just tell you that as well. All right, so moneycoachmike.com/call. We'll see you there.